Welcome to Impact Farming, where we introduce you to the people and ideas that will have a massive impact on your farming operation. Brought to you by Farm Marketer. Sit down, start the engine, and let's roll with today's show.
Hello everybody, and welcome to the Impact Farming Show. I am so excited to have you back and joining us for another great interview. Today I have Edith Frison with us, and she is from the Brandon, Manitoba office for MNP. Welcome.
Thank you.
I am so happy to have you here. There has been a lot of changes that have gone on in the government, accounting based, tax based, and the second one that I wanted to talk to you about is accelerated capital costs for farmers.
Okay.
There has been a change there, and from what I understand, it's positive for farmers, right?
It is, yes,
Okay.
for sure.
And before we go in, I always like to make sure we do a 101. So let's do a 101 explanation of capital cost allowance.
Okay.
Okay?
So essentially, capital cost allowance is the depreciation that you take on your equipment and fixed assets that you use to produce income.
Okay?
And the way it works for tax purposes is we group similar assets together in pools.
Okay.
And they are called different classes. So, for example, most furniture and fixtures would be class 8,
Okay.
and that's depreciated at 20%. So 20% per year would mean over about 5 years you get to depreciate that asset.
Okay.
Anything that is self-propelled, like a combine, would be part of class 10, and that's depreciated at a higher rate, which is 30%.
Okay.
So depreciated over, let's say, 3 and a bit years. For capital cost allowance, the capital cost allowance rules also have this funky first year, half year rule. So in the first year you own that piece of equipment,
Okay.
you can only depreciate at half of that percentage. So for example, when I said furniture and fixtures is depreciable at 20%, in the first year, if you buy a piece of equipment that's a toe behind, it would be depreciated at 10% in the first year.
Yeah, I read that.
Yeah.
Okay.
Yeah. So
Okay.
that's the way it works.
Okay, gotta love it. And that is why I'm like, let's do a 101 here for us non-accounting folk. Okay, so the government's come in and they've created what they call an accelerated capital cost allowance for farmers.
They have.
So what does that mean then?
So what they're saying is that they are going to let you depreciate your asset at a faster rate.
Okay.
So they're going to ignore that half year rule I brought up,
Okay.
and actually add an extra half year in the first year that you depreciate that piece of equipment. So in the example where I used for class 8 depreciates at 20%, instead in the first year you're going to get to depreciate your asset at 30%. So
Okay.
the 20, which you would have had in a regular year, plus 10,
Okay.
which is half of the 20%.
Okay. So I might be going a little off on the left field here. Well, no, let's just roll into why have they done that?
But once again, I don't know why the government does anything they do.
That's kind of a silly question on my part, right?
My understanding, though, from reading the newspaper and looking at their commentary, is that they're trying to spur economic growth and
Okay.
encourage individuals to invest in equipment and invest in their business and keep everything sort of rolling, keep the economy healthy and vibrant.
Okay, that makes sense. So I guess maybe if they feel it's a little sluggish, the economy, people aren't buying,
Right.
maybe because grain prices are down, they go,
Right.
hey, wait a minute.
There
Let's,
is some sort of commentary that indicates that potentially it's because of what Donald Trump did in the U.S.
Okay.
It starts to mirror a little bit some of his policies.
okay,
So,
okay, that makes sense.
I'm not sure if that's true, but
Okay.
that's what I've read.
We'll just speculate here on
Sure,
the show.
yeah.
We cannot be held to this, guys. So I am curious, when did this come into effect and what qualifies under this?
Okay, so November 20th, 2018 is a very important date. If you purchased assets before November 20th, 2018, those will not qualify for this accelerated CCA rate.
Okay.
Anything purchased after November 20th, 2018 will qualify.
Okay.
Anything new to you. So even if it's used equipment, if it's new to you, it will also qualify for these accelerated rates. And these accelerated rates are actually in force up till 2028. So after 2028, there'll be another change.
Oh, okay.
Okay. The other thing to sort of keep in mind is if you purchase assets from yourself,
That's what I was going to ask.
they will not qualify.
Oh,
it has to
darn.
be, you have to purchase assets from a non-arm's length individual.
Okay, so then I was just going to say, so now if you purchase...
From an arm's length individual. A non-arm's length individual is somebody you're related to. It has to be from an arm's length.
Okay, there we go.
Sorry.
I was going to ask, can you buy from family? Because then that's kind of like buying from yourself almost.
It sort of is, yeah.
Okay, so, that's when it came into effect.
Actually, there could be scenarios where that works, buying
Yeah.
from family. But yeah, once again, maybe contact your advisor before
Okay.
you do that.
Okay.
Yeah, for sure.
Well, and I mean, purchases from somebody you're related to, it doesn't necessarily mean it's just
For sure.
anything funky. It could be legit.
Could be.
Yeah, okay. What qualifies under this new capital cost allowance?
Pretty much any assets you would purchase for your farm. So any kind of machinery and equipment, any buildings, pretty much everything that I can think of would qualify.
Okay, well then that's good to know. And I guess really if you look at it and kind of how you touch too, the goal of it really, they want to get people buying stuff, right?
They really do, yeah.
And I'm the first to own, I am not an accountant, so here we go, I'll throw myself under the bus. But I'm going to put Farmer Tracy hat on now. Really, if I am a farmer and I'm looking at a really good year and I want to have some deductions and I'm considering a new combine or a new piece of machinery, is that kind of where this comes in? Oh yeah, maybe it makes sense to buy so that I can get the bigger deduction this year when crop prices were great, where I want to bring down. Does that make sense?
Sure, it does make sense.
in some theory of mine.
Farming is accounted for on the cash basis. So if you put out the cash, then you can take the deduction, and you always want to get your income to zero. Like that's always the goal,
Yes.
so you pay very little tax. One thing I want to emphasize is in tax we have certain expressions, and this is one of our tax expressions: don't let the tax tail wag the dog.
Okay.
So if you are interested in purchasing a piece of equipment or machinery, and it makes sense for your business, by all means go ahead and do that.
Good. Okay.
Don't buy new equipment just to get this deduction.
Okay.
Yeah.
And that's kind of where I was trying to lead you, because sometimes I think farmers, we may think of that as business owners, and I know accountants also see the big picture and go, no.
Right.
Don't make silly decisions for this reason that are going to affect you negatively, right?
Right, because this accelerated tax rate means, or CCA rate means, that you're going to get a bigger expense in the first year.
Right.
But it's really just a timing difference. You're going to get the same expense you would get otherwise. It's just faster.
Okay.
And so one thing to keep in mind is if you're going to sell this piece of equipment, you could have tax later on because you have depreciated it rather quickly.
Oh.
But it actually hasn't lost any value.
Oh.
And so when you sell it, there could be something called recapture, which is actually taxable. So this is great. It's good to have lots of expenses inside your farm to bring your income down to zero, but it's definitely something to keep in mind. Because you could actually take the expense at a low tax rate, and then 5 years down the road, your farm does much better, and now you're being taxed at a much higher rate, and that's the year that you get that recapture.
Okay.
So you've actually only got an expense at 10%, let's say, and now when you sell it, you're going to actually pay tax on the sale at 27 or some higher rate. So just make sure that you contact your advisor and sort of run your plan by your advisor before you go out and buy a $700,000 piece of equipment.
Just to get a tax deduction.
Just to get a tax deduction.
Yeah. Okay, and that's kind of where I was leading you to, because one of my main goals with this show is to bring farmers the people and ideas that'll impact their farming operation. And you know, as a farmer, there is so much to do on a daily basis.
I know.
Just production oriented, right?
For sure.
Just to try and make it through your day and get everything done. Farmers don't have enough time in the day. So to be on top of every single thing that they need to know for accounting,
No, absolutely.
it's just
they
so
should,
hard, right?
For sure. And they should never hesitate to give us a call and ask us a question. Any advisor out there, for sure.
Good.
Like, I'm sure people are always happy to help and make sure that their farmers make the right decisions. So, yeah.
Okay, excellent. So I think you left that on a great point. And really, if anybody wants more information, go see their advisor.
For sure.
And definitely, I mean, that's a quick email, that's a quick call, and it can save you some bad decisions, right?
Absolutely.
Financially,
Yeah,
right?
absolutely.
I have heard through the grapevine that sometimes this accelerated capital cost allowance is being used as a bit of a perk by different companies to say, hey, you really should buy because now you can do this, right?
Right.
So sometimes in the face of everybody saying different things, you really don't know the truth, right?
100%, yeah.
And I know accounting is definitely not my gig, so anytime
Well, we're happy to help.
yeah. Anytime I have questions, I'm reaching out to my guy or my gal, whoever it is at that point, because that's
sure.
what you guys do best. So
Right.
Good. If you don't have anything to add, I think I got all my questions out.
Okay.
And anybody at home, if they have more questions, absolutely feel free to contact your advisor or Myers North Penny. I know you guys have dedicated ag team right across Canada
We
too,
do.
right?
And in any
Good.
city, I'm sure you can find an MNP specialist. So.
Excellent. Well, thank you guys for joining us. I hope you enjoyed the episode, and thank you so much, Edith.
Thank you.
See you guys next time.
You've been listening to Impact Farming. For more great episodes and articles designed to help you manage and grow your farming operation, head on over to farmmarketer.com. Don't forget to sign up while you're there. We will see you on the next episode.